Hello everybody, this is Lara with your weekly video for Bitcoin for the week beginning Monday, 2nd of May 2022. I'm changing the main Elliott Wave count at the daily chart level. It doesn't make any difference to where I expect support to be found. The invalidations point is still exactly the same, and it doesn't make any difference to the long-term expectation of a bull market continuing for Bitcoin. But it does expect for the short-term more downward movement, and it's very specific. I expect this week to see more downward movement slowly to end below 36,820.336, but not below 36,377.886. This is very specific. When that's done, and if it does reach the lower edge of the channel, I expect strong support at the lower edge of the channel on the daily and weekly charts, and when that's done, the pullback should be over and the next wave up should then be beginning. Elliott Wave analysis first, classic analysis last, and it's again at the beginning of a new month, time to step back and look at the monthly charts. This is the entire price history of Bitcoin. Well, I think there might be another one or two candlesticks off to the left of the chart, but I'm beginning my wave count here. I think this is December 2010. From this low to this high, this upward movement fits perfectly as a 5-wave impulse. Primary 1, 2, 3, 4, 5 completes cycle wave 1. Following a 5 up is a 3 down. Cycle wave 2 is an 84% correction of cycle wave 1. It doesn't look that deep because this chart is on a semi-log scale. You cannot view Bitcoin's longer term price history on an arithmetic scale. You just can't see the subdivisions. Following cycle 2, cycle 3 should have begun, and I have a couple of different wave counts looking at this in different ways. I've got a whole bunch of notation on this chart because it's important to look back at Bitcoin's price history with a full Elliott Wave count and see how long are its waves in relation to each other, how long did they last, and how deep were the corrections. Primary wave 3 here is 38.87 times the length of primary wave 1. This is not a Fibonacci ratio. I'm just noting on the chart how long 3 is in relation to 1. Primary wave 5 is 15.87 times the length of primary wave 3. Again, that's not a Fibonacci ratio. And it's 616.67 times the length of primary wave 1. This is a very extended 5th wave. These wavelengths are very extreme, and Bitcoin very rarely exhibits Fibonacci ratios, which makes target calculation incredibly difficult. Up to this high in December 2017, I was analysing Bitcoin daily, and I gave up on using Fibonacci ratios with Elliott Wave to calculate targets because it kept blowing them all away. I ended up just using classic analysis techniques to identify a sustainable high, and I was able to do that 6 days after it formed. I'm going to try and do the same again for primary 3 and cycle 3. I'm also noting how deep these corrections are. Primary 2 is a 94% or 0.94 length of primary 1. Intermediate 2 is 0.64 of intermediate wave 1. Intermediate 4 is 0.76 of intermediate 3. The deepest part of primary 4 is 0.91 of primary 3, and cycle 2 is 0.84 of cycle wave 1. As you can see from these notations on this chart, Bitcoin's pullbacks or bear markets do tend to be very, very deep. The duration of cycle wave 1 was 7 years and 2 months. That's absolutely what you would expect for a cycle degree wave, and the duration of cycle 2 was 1 year. The corrections do tend to be more brief than the impulses that they correct. This looks absolutely normal for a cycle degree wave, and so I also expect that the degree of labelling is most likely correct. And so if cycle 2 is over there, then cycle 3 should have begun. I'm taking a stab at some target calculations for cycle 3, but I don't have a lot of confidence in them. It's just an idea, trying to get some idea of where it could possibly end up. There's an enormous range in these targets. The first target is for cycle 3 to reach 11.09, the length of cycle 1. That is a Fibonacci ratio, although it's rather extreme. The second target is for cycle 3 to reach 38.87 times the length of cycle 1. That's not a ratio. That's the ratio, well, not a Fibonacci ratio, sorry. That's the ratio between primary 3 and primary 1 within cycle 1. If at a higher fractal or higher degree we see cycle 3 exhibit the same ratio to cycle 1, then that would be a reasonable target, 775,540. And the other reason why I've got these targets here is just to illustrate to you, looking back at Bitcoin's price history, what could be a reasonable target for this cycle degree third wave. This is actually quite reasonable. Here's another Fibonacci ratio, but it's quite extreme. If cycle 3 reaches 46.979, the length of cycle 1, the target would be 936,671. I'm expecting cycle wave 3 may last a Fibonacci 8 years. If that is correct, it should end in December 2026, and then cycle 4 should last about 1 year, could end in February 2027. And then cycle wave 5, if cycle wave 3 exhibits the same duration to cycle wave 1, it would end in February 2026. And then if cycle 4 lasts a year, it would end in February 2027. But if the next duration is correct, then obviously this duration for cycle 4 is wrong. Again, highly provisional, just taking a stab at trying to figure out where and when this could end. Let's take a look now as we move over to the weekly chart. We're going to have a look at the structure of cycle 3, and I've got a couple of alternates, this low here of cycle 2. Actually, before we go there, and feature of Bitcoin's past price history, it has these vertical rises and then a big crash, and 94% correction is a crash by any definition, and then it starts off slowly, accelerates through the middle, explodes at the end of the next upward movement, then another big crash. The following big crashes tend to not move back into previous sustained highs. So this deep pullback was a 91% of primary wave 3, but it remains well above primary wave 1. Now we have a sustainable high here in December 2017 for cycle 1, and price is now passed above that point. I do expect any subsequent deep bear markets for Bitcoin to not overlap back into cycle wave 1 price territory. That's not an Elliott Wave rule, that's just looking at past behavior for this market and noting that's what it tends to not do. It has an overlap back here, it has an overlap back here. I expect it won't overlap back here now that price is broken above that resistance. Okay, let's take a look at the first of 3 weekly charts. This low here, the end of cycle wave 2, this point here. From this low, I am expecting that primary 3 is incomplete, with primary 1 and 2 may be complete here, and primary 3 extending, with intermediate 1, 2 and intermediate 3 extending. The third waves for Bitcoin are normally extended, and the fifth waves even more so. Within primary wave 3, intermediate 1, 2, within intermediate 3, minor 1, 2. A series of overlapping first and second waves is absolutely normal for the start of a long, large third wave for this market. This is following absolutely normal behavior for this market. Draw a base channel around minor 1 and 2 from the start of 1 to the end of 2 with a parallel copy on 1. Found resistance up here, found support here and here and again here. This trend line has quite a shallow slope. It is long held and it has multiple tests. I have a strong expectation that this trend line should not be breached, and we should look at that clearly at the daily chart level. Here's another stab at a target for primary wave 3. At 417,507, primary 3 would reach 38.87 times the length of primary 1. That's not a Fibonacci ratio. That's the ratio between primary waves 1 and 3 within cycle 1. If primary waves 1 and 3 within cycle 3 have the same relationship, then that's a reasonable target. At the very least, this gives us an idea of what is a reasonable expectation. Even though the target may or may not be met, this is a ballpark figure of where this could possibly end up, given Bitcoin's past behavior. I'm also taking a stab at a duration. If primary 3 exhibits a Fibonacci duration in 144 weeks, it could end this year in December 2022. Within minor 3, no second wave correction may move beyond its start, below 33,184.06. At the daily chart level, this is my new wave count. Still seeing from the weekly chart, the end of minor 2 down here, this low is this low down here. Now we're looking at more detail at the daily chart level. I wanted to consider a leading diagonal because this wave up and this wave up and this wave down, but this wave particularly and this wave particularly really do have a best fit and look better as zigzags. And now this pullback is time consuming in duration and really deep, and so it looks after the last week like we do need to now consider the less likely structure for minute 1, a leading diagonal, and here it would be a leading expanding diagonal. Leading diagonals require subwaves 2 and 4 may only subdivide as zigzags. Waves 1, 3 and 5 are most commonly zigzags, but they can also be impulses for a leading diagonal. For a leading diagonal, subwaves 2 and 4 are commonly very deep, and so this looks normal, and 4 for a diagonal must overlap wave 1 price territory. The rule for 4 is it may not move beyond the end of 2 below 34,459.22. I don't expect it to get down that far. Here is the lower edge of that base channel, which I copied over from the weekly chart, and I'm drawing the weekly chart on a semi-log scale and the daily chart on an arithmetic scale. So look for support at the lower edge of the base channel with it drawn both ways. At the daily chart level, this wave count expects minuet wave 4 to not break below the lower edge of the base channel, and that has the highest probability. There is really strong support down here. This wave count actually expects minuet 4 to fall reasonably short of the base channel, and it's very nearly complete. So the leading diagonal for minute 1 is minuet 1, 2, 3, 4, 5. Minuet 3 is longer than 1, and minuet 4 should then therefore be longer than 2. Minuet 4 would reach equality in length with minuet 2 at 36,820.336, so it has to end below that point. It can't be just equal in length with 2, it has to be below this point. Within minuet wave 4, subdividing as a zigzag, there may be subminuet A, B and C, and subminuet C may be unfolding as an ending contracting diagonal. With micro 1, 2, 3, 4 and microwave 5 may not be longer than equality in length with microwave 3, it would reach equality in length with micro 3 at 36,377.886, so it has to end before that price point in order for this part of the structure to remain valid. So I am expecting more downward movement this week to end below this price point and above this price point, even by a fraction of a cent would meet all Elliott Wave rules. So this is a very specific range that I expect a little bit more downward movement to end this week. When that's done, I expect a strong upward bounce and the final fifth wave of the diagonal to complete minute wave 1. When I know where minuet 4 has ended, I can then calculate a minimum requirement for minuet 5 because the diagonal is expanding, so 4 must be longer than 2, 3 must be longer than 1, and 5 should be longer than 3 to meet rules regarding wavelengths for expanding diagonals. At the daily chart level, we've still got the end of minor 2 here. What if minute 1 was over here, and rather than continuing as a leading diagonal, what if it was over here as an impulse and minute 2 is continuing as an expanded flat, subdividing 3, 3, 5 to be labelled A, B, C. C would need to move below the end of A at 34,459.22 to avoid a truncation and a very rare running flat, but that would require the lower edge of the base channel to be breached or overshot, and there's a lower probability of that happening. This does remain valid though. Minute 2 may not move beyond the start of 1 below 33,184.06. This second wave count illustrates the risk to that first wave count, which has a very specific price range that downward movement must end in for that first count to remain valid. At the weekly chart level, from this low to this high, you really do want to label this as a complete 5-wave impulse. So what if only primary wave 1 is over at this high with intermediate 1, 2, 3, 4, 5? One of the reasons why this has a lower probability is the length of intermediate 3 in relation to 1 is only 5.71. Remember those notations I have on the monthly chart. When we look at intermediate and primary degree waves, the shortest I think is over 15 times the length The third waves at primary and intermediate degree are at least 15 times the length of their counterpart first waves. Here, intermediate 3 will only be 5.71 times the length of intermediate 1. Bitcoin hasn't done that before, so that reduces the probability of this wave count. But just because it hasn't done it before doesn't mean it can't do it now. We do need to be open-minded and consider alternates, and the alternates also outline the risk. So the length of intermediate 3 to 1 is what reduces the probability of this wave count. If primary 1 is over here, then primary 2 should continue lower. The first target has the highest probability. Primary 2 would reach the 0.618 Fibonacci ratio of primary 1 at 28,249. This target has the higher probability because it sees primary 2 not overlap back into that sustainable high of December 2017. And I went through that monthly chart with you and showed you that Bitcoin's never done that before. So let's expect it to not suddenly do something it's never done before. If, however, support around here is breached, then here's a normal target range for primary 2 for it to end between 80 to 90% the length of primary wave 1. That is normally a normal depth for a primary degree second wave or intermediate degree second wave for Bitcoin. This wave count, at the daily chart level, we're now looking at the end of primary 2, intermediate A, double zigzag for B, now looking for probably a 5-wave impulse for C with a minor 1 and 2 complete. Now minuet 1 2 minute 1 2 minuet 1 2 subminuet 1 2. This wave count now sees a series of 1 2 3 4 overlapping first and second waves, so a third wave at 4 degrees should start to show an increase in downward momentum and range next week. If we do not see an increase in downward momentum and range this week and into next week, then the probability of this alternate is going to seriously reduce even further. At the weekly chart level, what if instead of primary 1 being over here, what if this is just part of intermediate 4? What if primary 1 is incomplete with intermediate 1, 2, 3, 4 and then 5 to continue, and then primary 2, a big bear market for Bitcoin. Intermediate 4 could be a running contracting or running barrier triangle with A, B and C complete. D may not move reasonably beyond the end of B, and E may not move at all beyond the end of C below 33,184.06. This wave count would expect overall sideways movement in an ever decreasing range before an upward breakout to complete an impulse for primary wave 1. For this idea, if that's how price unfolds, when I have confidence about the end of intermediate 4, I can then try and have a stab at calculating a target for intermediate 5 for you. This wave count, like the last weekly chart, also suffers from the problem of intermediate 3 being only 5.71 times the length of intermediate 1. That's shorter than an intermediate degree third wave for Bitcoin normally is, so reducing the probability. Okay, classic analysis now. Let's take a look at the monthly chart as well. At the beginning of May, we have April's candlestick complete. Downward movement for April shows a decline in volume. We have 1, 2, 3 months in a row of declining volume while price is essentially moving sideways. I expect support at 28,000 to be very strong and to continue to hold. I do not expect downward movement below this support line now. It is repeatedly tested, and it means that this sustainable high in December 2017 will not be seen again, and that, given Bitcoin's price history, would be normal behaviour. On balance volume at the monthly chart level gives us no signal. At this high there was very strong bearish divergence that could be resolved now by a couple of months of strong downward movement and now some sideways consolidation to relieve extreme conditions. ADX still declining at the monthly chart level, no clear trend, and stochastics neutral. At the weekly chart level, downward movement for the last couple of completed weeks is now coming with an increase in volume. Volume is actively pushing price lower. ADX tells us there's no clear trend and stochastics is neutral. So it looks like after an upward swing, we're now getting a downward swing. Look out for support, pretty strong support at 34,000, and below that 29,000, very, very strong support. I do not expect this to be breached, even if this is. On balance volume at the weekly chart level gives us a bearish signal. It's in conjunction with a lot of overlapping and zigzag looking structures. It's these 2 weeks of increased volume pushing price lower, and now a bearish signal from on balance volume, which give me confidence in the new daily Elliott Wave count, which expects a little bit more downward movement before we finally find support and this deep pullback finally ends. RSI neutral. ADX tells us there's no clear trend at this time frame because it's below 15, it's too low. ATR declining as price moves sideways, absolutely normal for behaviour for a consolidation. Over stochastics, and I just leave this here at the bottom of my weekly chart just to illustrate. Every now and then someone comes into comments and asks me, Lara, you've got a wave count saying the S&P should do this, why don't you think Bitcoin's going to follow? Because Bitcoin usually follows. The correlation coefficient between these two markets is very stark and very clear. These two sets of data are absolutely not correlated. Any positive correlation they may exhibit from time to time is completely unreliable. It can break down at any time. They can even be negatively correlated for short periods of time. This correlation coefficient is the look of how correlation coefficient behaves between two sets of data that just aren't correlated. Any correlation they may appear to exhibit from time to time is due to chance, not because there's actually a relationship between the two. It's an incredibly unpopular view, but I'm going to go with the math and not what people think, because the math, well, that's what it's there for, to test our assumptions. At the daily chart level, another low this week. Downward movement coming with declining volume now. We still have bullish divergence between price and RSI, although it didn't reach oversold here, so I don't have as much confidence in that as I would have if it had reached oversold back down here. Downward movement coming overall with declining volume. Support holding at 37,700, pretty strong support below that at 34,000. The moving average situation remains full bore bearish. At the daily chart level, ADX is indicating a downward trend. RSI is not oversold, so there's room below for the downward trend to continue. Stochastics oversold, but when there's a trend, this can remain extreme for a reasonable time. ATR declining as price moves lower. There is weakness in this downward movement. I don't expect it to continue for too much further. We will find a low, and the new Elliott Wave count gives you a very specific price point, not a range between which I expect that low to finally be found this week or next week. That's all from me this week with your Bitcoin analysis. I hope all our members had a fabulous weekend.